Tesla very well may be going to $350, but you should not buy the stock right now. You should do these two strategies instead so you don't lose your money on the next pullback that happens in Tesla. Now, this right here is my portfolio, currently trading at 658,000, and I'm showing this live, and I will be turning this into 10 million in 7 to 10 years. So I'm going to be documenting the whole process right here on YouTube. So if you want to be in this process, go ahead, hit the subscribe button, and make sure to smash the thumbs up button if you get value from this video. Now, remember, this is not financial advice. This is just me educating you on options and showing you how I've built my wealth. Now, if you want my free stock picks in your inbox every Monday, Wednesday, and Friday in my market analysis, go ahead, click the very first link down below in the description. It's going to take you to my free newsletter, Options Trading University. And lastly, if you want to connect with me on Instagram, it's Ryan Hildreth. That will also be down there as well. So you can see a little bit about my personal life and talk with me personally. I love talking to you guys. So let's go ahead and get into it. Tesla has been on a complete tear after the elections. I mean, this thing has skyrocketed $288. By the time you're watching this right now, it could very well be above 300. Maybe it pulled back a little bit to 260, but either way, this thing has a lot of momentum, especially with Donald Trump being president and being friends with Elon Musk. So as you can see in the past year, only up 15% for the year, 66% for the past 6 months. And if you scroll down to their fundamentals, their annual free cash flow is improving, their cash and equivalents is going up, and their debt is staying about the same. So we see their financials doing better on a fundamental analysis. But let's go ahead and look at technicals, okay? First, I want to talk about QQQ, the NASDAQ 100. The reason why I look at QQQ when looking at Tesla is because it's more heavily weighted in QQQ versus the S&P 500. It's about 3.6% in QQQ. So as we see, the overall market is trending higher. We had a huge update today after Trump was announced president. And on the RSI, we are still not overextended. We're still not above 70 on the RSI, which is one of my favorite indicators to look at. Just give me an idea of where we're at in relative to the overall market, okay? So we still have a ways to go. I believe QQQ could go up to probably $520 by the end of year, by Christmas time. How I'm positioning is completely bullish. Now, what we could do on Tesla, okay? Tesla has some resistance points. As you can see, 300 was a huge key psychological level for Tesla last year in July, okay? We hit 300, and ever since then, we haven't been able to retest that level. But now we are approaching that level once again. We've had continuous momentum and strength this year, and I believe that we will bust through this 300 level. But then there's a few more levels back here that we haven't touched since 2022, okay? There's this 320 level, and then we have another level here, which is that around that 350 area. So I believe that Tesla could get to 350, especially with Trump being in presidency, and then favoring his company as well, and just overall the sentiment of the market. I mean, if you look around, everyone's driving a Tesla. It's pretty crazy. I'm pretty much the only one who doesn't have a Tesla, but I'm not buying the stock at this level. I'm going to show you what exactly I'm going to do instead if I wanted to add this to my portfolio. It's not currently in my portfolio, but I'm looking at it as a strategy to deploy. So here's some Tesla strategies to not miss out on the next $350 run up. You don't want to miss out on the run up because that would really suck if you just kind of played on the sidelines. So I'm going to show you how to get into Tesla at a better price. Also, I'm going to show you how to collect income while you're waiting for the stock to go up. So the very first strategy that I'm going to deploy is selling cash secured puts. This is the most risk averse. So if you don't want to risk your money on Tesla, like you enjoy the stock, you believe in it, you like Elon, but you don't like it at these prices, then the best way to get into the stock, or at least collect income while the stock's going up and participate, is to sell cash secured puts. So you will have to have enough money to buy 100 shares of the stock, currently trading at 280. So you'll need $28,000. All right. So And I'll also show you for small accounts, if you don't have 28,000, I'll show you how to do a vertical spread. The very first thing we're gonna do is a 20 delta put, 45 days till expiration, okay? And then I'm gonna show you a vertical spread, 14 delta, 45 days to expiration, and explain exactly why I would take these trades. So we're gonna go to the December 20th expiration. It's about 44 days out, all right? And we're gonna go to the 20 delta put. Now, I know there's no 20 delta here, so we'll just go down to the 19 to be extra safe. And that's the 250 strike, okay? We can collect $600 for putting up $25,000 worth of capital. Let's do the math on that. All right, so $600 divided by 25K equal time 100. So that's about 2.5% return in 45 days, which is pretty good. That's a pretty high return considering how safe we're going on the puts. Now, if you're someone who's a little bit more risky and you're willing to get assigned, let's just say at 265, you still think that's a great discount, then you're gonna collect $1,000, okay? So let's just do $1,010 divided by 26,500. All right, times 100. Now that's almost a 4% return in 45 days, so that's even better. Now, again, if you're super risk averse, I would do the 250 strike. Just collect your money, be happy with it, and spick and span, you're done. But what happens if this trade goes against you, okay? What happens if it goes against you? If for some reason Tesla pulled all the way back to $249, all right, and your put expired in the money, which would be pretty crazy. That'd be a pretty significant pullback. That would be all the way down here, okay? That's a pretty significant pullback. If it did that by expiration, all right, you'd get assigned the shares at $250, but you got a huge discount on the stock. So now what you could do is create income off that, and I'll show you in the second strategy. But before we get into it, let's just do the vertical spread for the small accounts here. Anyone that's watching that has a small account, this is exactly what I would do with a small account. I would wait for a pullback only when Tesla is down on the day. Definitely not on an up day like today where it's up 13%. You have to wait till Tesla comes down to take advantage of the strategy so it can be safe as possible. You wait for it to come down and you go ahead and sell the 15 delta. I know there's no 15 delta here, so 14 delta to be safe, which is the 240 strike, okay? You're gonna sell this one and then you're gonna buy 10 points down, which is the 230. You're gonna buy that put, okay? So sell the 240, buy the 230. You're risking $1,000 to make 136. Risk to reward is not quite where I'd like it there, but if you want to play this stock, you can do that. If you want to go a little closer, all right, maybe you go 19 delta. Okay, let's try the 19. Go here and then buy the 240. You'd risk 1,000 to make 192. I rather do the 14 delta to be safe, okay? And then you put on that spread. You risk 1,000 to make 136. And there you go. If you want to play Tesla, that's how to do it on the options side. Now let's go ahead and get into creating income off your stock. Maybe you currently own 100 shares or you want to buy 100 shares. What I personally would do is I would buy shares because I believe it's going to 350. I would only buy on a down day and then I would sell a covered call against it at the 350 strike. So you buy 100 shares, then you sell a covered call, 45 days till expiration at the 350 strike. Let's go ahead and do that. Okay, so we buy the shares, we're gonna press buy, only on a down day, so I wouldn't buy today. Maybe tomorrow the stock will be down by like a couple percent. Buy 100 shares, boom, review and send. Then immediately go to December 20th, 44-day expiration, and you're gonna go to the 350 call, okay? There we go. We're gonna collect $565. Let's do the math on that. So 565 divided by, say you bought 100 shares at, I don't know, $28,000. All right, that's a 2% return. Pretty good in 44 days. And let's just say Tesla did hit 350 or went above 350. we'd be forced to sell our shares by expiration. So we could do the math on that. We're gonna have to sell our shares at a huge profit. So let's just do 350 minus 286, 64 divided by 286 times 100. So we'd make 22% in 44 days plus an additional 2%, so 24% in 44 days by buying the shares and then selling that covered call and waiting for Tesla to go up to 350. Now, if it doesn't go up there, then you're gonna go ahead and sell another covered call, maybe a little bit lower or depending where you think Tesla could go, to collect more income until it gets to that strike, and then you profit along the way. So that's exactly how I would trade Tesla as of now, considering that this thing could go to 350. I definitely see momentum on the stock, and I do believe in Elon and what he's doing. If you enjoyed this video or got value from it, please hit the thumbs up. Comment down below if you have any questions, and I'll see you in the next video. I'm gonna link right here, which is the wheel strategy, which I use to create wealth.